Good morning, everyone, and thank you for your patience. We have another witness, a panelist, who will be joining us, Miss Murphy. She had a little bit of a car scrape here on her way, but she said she was coming, and so I think I'm going to get started, and she will join us in a few minutes. So, as you all know now, the joint hearing originally scheduled today with the House Agriculture Committee requires the consent of all members, including Democrats. I, in good faith, could not provide my consent because our Republican colleagues refused to address the unprecedented conflicts of interest presented by President Donald Trump and his family. I'm deeply concerned that Republicans aren't just ignoring Trump's corruption, they are legitimatizing Trump's and his family's efforts to enrich themselves on the backs of average Americans. Through his crypto business, Trump has turned the office of the presidency into a personal money-making machine. He is flouting our country's national security and anti-corruption laws, following the adversaries like China and Russia to curry favor, either blatantly or anonymously, through transfers of money to him and his inner circle. Just this morning, we saw new reports that insiders made nearly $100 million on Melania's meme coin. Trump's actions undermine our democracy and free market system. In fact, this is how authoritarian regimes do business. The President of the United States, who took an oath to uphold the Constitution, has said he doesn't know if he has an obligation to uphold the Constitution. He has questioned whether Americans are entitled to due process, a constitutional right that protects the people from exploitation of government power. He is arresting judges, blackmailing law firms, and deporting American citizens, including children. Trump believes he is above the law. Well, he's not, and Democrats will do what we can to hold him accountable. Now, let's take a look at the timeline of President Trump's profiteering, shall we? President Trump kicked off his presidency with the launch of his meme coin, which reports have shown have lost investors $2 billion, while he made at least $350 million. In March, President Trump's World Liberty Financial announced the launch of its stablecoin, conveniently named USD1, just before our committee was scheduled to vote on legislation. Stablecoins are a type of crypto that claim to maintain a constant or stable value and are used in most crypto transactions today. Nevertheless, the Republicans' bill did nothing to address Trump's conflict and instead voted to hand Trump the authority to write the rules over his and his competitors' stablecoins. In April, Trump's sons launched their own Bitcoin company, American Bitcoin. Not coincidentally, President Trump had already instructed the Treasury to create a Bitcoin reserve and a digital asset strategic reserve, a move that would boost the value of the Bitcoin he and his cabinet members own using taxpayer resources. Trump ran on a campaign to put more money in the pockets of Americans. Turns out he just meant his pockets and those of his cronies. His first 100 days are filled with failures, chaos, and incompetence. The United States' role and reputation globally has been severely damaged, and many Americans are worried they will no longer receive the Social Security checks and Medicaid they need. Now, congressional Republicans insist on pushing forward crypto market structure legislation. I ask members to keep in mind all of this is occurring against this unprecedented backdrop. Every day, congressional Republicans refuse to stand up for their constituents. They diminish their power and Congresses and damage the country's democratic future. As members of Congress, we have the serious duty to protect and defend the American public. And since the Republican majority refuses to do its job, I'm hosting today's roundtable to shed light on these critical issues before it's too late. I have also posted a discussion draft for this hearing that would ban the president and members of Congress from owning crypto assets and firms. I'm pleased to hear that our Democratic colleagues in the Senate are similarly voicing concerns about Trump's corruption and the dangers of passing legislation that doesn't address it. And I'm very pleased that Democratic members of the House are ready to do the same. With that, I will now introduce our panelists. As I said, Ms. Murphy, who will be with us later. Oh, did she arrive? Oh, there you are. Welcome. Thank you. Okay, first we have Chassity Murphy, who is a visiting research fellow at the University of Manchester Law and Technology Initiative. She is also an alum of our own Representative Tlaib. After working for Ms. Tlaib, Ms. Murphy was a senior advisor at the United States Department of Treasury under Secretary Yellen. Next, before that, I want to thank you, and I'm very concerned that you're okay. I was a little bit worried. Next, we have Timothy Massad, who is a research fellow and director of the Digital Assets Policy Project at the Harvard Kennedy School. Mr. Massad also previously served as the chair of the Commodity Futures Trading Commission and the Assistant Secretary for Financial Stability at Treasury. Next, we have Mark Hayes, who is a senior policy analyst at Americans for Financial Reform. And last, we have Jeff Howser, founder and executive director of the Revolving Door Project. Welcome, and thank you all for being here. I will first go to Ms. Murphy for brief opening remarks. Thank you.
Thank you, Ranking Member Waters and members of the committee for the opportunity to testify today. My name is Chassity Murphy. I served as senior advisor at the U.S. Treasury Department, where I helped oversee financial regulatory policy and digital assets. I now serve as a visiting research fellow at the University of Manchester. I'm here to sound the alarm about the risks posed by the convergence of unchecked crypto speculation and high-level corruption, especially by President Donald Trump. This is not a matter of lax oversight. It is about willful sabotage of financial safeguards for personal gain. Donald Trump's crypto empire is not an outgrowth of innovation. It is a vehicle for influence peddling, bribery, and regulatory capture. Trump now controls two major crypto enterprises, the Trump meme coin, known as Trump, and the private digital finance firm, World Liberty Financial. According to the Financial Times, Donald Trump has already pocketed over $350 million from his meme coin, primarily offloading tokens tied to the same blockchain network used by Sam Bankman-Fried to defraud his investors. He is now offering private dinners to 25 largest Trump holders. One, a U.S. logistics firm, Freight Technologies, has already pledged to buy $20 million worth. But for every public transaction, there are countless others happening in the shadows, and it's nearly impossible to trace who's buying them. This is a pay-to-play politics, only now it's anonymous, borderless, and nearly untraceable. World Liberty Financial, Trump's major crypto venture, recently struck a $2 billion deal with UAE-backed firm. Trump plans to take proceeds in his newly launched stablecoin and invest in Binance, a crypto exchange Trump released from their pending SEC investigation. This is textbook corruption using public power to obtain private gain. The shift from lingering in hotel lobbies to blockchain wallets hasn't stopped the bribery. It just made it easier to do and hide. Trump spent years trying to dismantle the CFPB, one of the agencies working to apply anti-fraud protections to crypto. When the CFPB proposed a rule in January 2025 to protect consumers, crypto CEOs' illegal effort to shut down the agencies was applauded. Why? Because gutting CFPB protects the bottom line. Now Congress is pushing the FIT 21 2.0 bill, which would let crypto firms self-certify their tokens as decentralized, stripping away SEC oversights. It's a backdoor for risky, unregulated assets, repeating the same deregulatory failures that led to the FTX and billions of losses. Supporting Trump's crypto agenda means rejecting basic investor protections and ignoring the hard lessons of 1929 and the 2008 financial crisis. Financial markets don't regulate themselves. Rules and referees are necessary to prevent crashes and corruptions. Crypto should not be an exception. As the FSOC's 22 report made clear, same risks, same regulatory outcome. If crypto firms act like banks or brokerage, they must allow for the same rules, whether it's in dollars or digital assets. Congress should establish clear prudential standards for stablecoins to prevent shadow banking. Give regulators oversight of crypto firms, combining trading, lending, custody. Ensure crypto platforms following existing investor protection and anti-fraud laws with enforcement by the SEC, CFTC, and the CFPB. If Congress indulges in the deregulatory whims pushed today and by Trump and his allies, it will be abdicating its duty to the American people. Whether you sit on the left or the right, ask yourself, will stripping away oversight of a volatile $1 trillion crypto market make your constituents better off, or just make it easier for the next FTX to rob them blind? Will giving Donald Trump and his associates free rein in a barely regulated crypto Wild West protect small businesses and community banks, or put the entire financial system at risk? The answers are self-evident. Thank you.
Thank you, Ms. Murphy. Next we will go to Mr. Massad.
Thank you, Ranking Member Waters and members of the committee. I'm pleased to be here. Let me state that my views are my own. They do not represent those of the Harvard Kennedy School. I've been asked to focus on the market structure issues, and let me just say I share all the concerns about the way that President Trump is enriching himself, but I'm going to focus on market structure. I think the first thing one should ask is, what is the goal of market structure legislation? The crypto industry always says they need clarity, but there's never been a consensus among them as to what that means. The Republican leaders have articulated principles, some of which are hard to argue with: innovation, who's not for innovation. But I would say the primary goal should be to plug the gap in regulation that we have, which is that there is no federal regulation of the market in digital assets that are not securities. I'm going to suggest a way to do that, and I'm going to then talk about the Republican approach as embodied in FIT 21 and in the new legislation that came out yesterday. But let me say first, I would keep in mind two principles to follow above all. One is do no harm, and the second is keep it simple. And what I mean by do no harm is, let's not screw up the American securities markets that are $120 trillion in value in debt and equity securities alone, not even counting derivatives, that are fundamental to our economy, that are the envy of the world, that are a greater source of innovation than crypto has proven itself to be. And we can easily screw those up by writing laws that promote a particular technology and rewriting a lot of decades of jurisprudence that has been built up in terms of the securities laws. And we certainly don't need more market turmoil these days. Keep it simple means just that. It's got to be understandable. It shouldn't create more ambiguity and complexity, and yet it needs to fill the gap. My suggestion of how to do that, how to regulate this non-security digital asset market without massive rewrites of the securities and derivatives laws, is for Congress to mandate that the SEC and the CFTC work together to create a joint self-regulatory organization that would be the regulator of these markets. Now, by SRO, I don't mean the industry governing itself. We've used SROs since the 1930s, FINRA, the National Futures Association. They've been very important in our oversight of these markets, but they are entities that are supervised and overseen by the regulators. The boards are appointed by the regulators. The rules are approved by the regulators. They're not industry running off on its own. I would give that SRO jurisdiction over every platform or intermediary that transacts in Bitcoin or Ethereum. That would be the jurisdictional hook. You could make it broader, but essentially if you say that, you're going to capture anything of any significance. And then you say the SRO's rules will apply not just to the trading of Bitcoin and Ethereum, but to every digital asset those platforms or intermediaries trade. You quickly cover the market, but you say securities, digital assets that are securities, the SEC can still come along and say that one's a security, it shouldn't be on this platform. It's got to be registered under our laws. So it's a way of establishing jurisdiction over this market without rewriting the securities laws, without undermining the authority of the SEC or the CFTC. And it brings those two agencies together, which I think is very important. One of the reasons we have this problem is because of our fragmented regulatory system. And I think both agencies have an interest and have expertise to be brought to this. We've kind of seen this debate shift to saying the CFTC should be the regulator of this market. I'm a former CFTC chairman. I think they're certainly capable. But I think the SEC needs to be involved too. If you really believe tokenization and blockchain technology is going to be important, then it's going to be important for tokenizing real-world assets and for tokenizing securities potentially and debt instruments. And that's one of the reasons why you want the SEC involved, so that the standards that emerge in terms of how we regulate digital assets, they are involved in. And SRO, of course, can also be paid for by the industry, so it's budget neutral. Now let's compare that to the Republican approach. Talk just for a minute about FIT 21, since we all have seen that and had time to digest it. It was, as you know, very, very complicated. A three-part test to distinguish the security, digital assets, restricted securities from digital commodities. A test that turned on the level of decentralization and functionality of the blockchain system. It turned on how the asset was acquired and on who holds the asset. So it was a point-in-time test, which means it could change over time. That doesn't create certainty for the market. It turns on the status of the holder, so that means you might bifurcate the market between the same essentially the same digital asset. And it requires information that wouldn't be accessible to all. Now they've ditched that and come up with a new approach. We've only just gotten it yesterday, but I think it's equally complicated, although it's somewhat different. It does designate the CFTC as the regulator of the spot market, but it still, I think, would create cracks in the foundation of our securities laws in order to favor a technology which is not what we should be doing. I want to see this technology developed if it's got real market potential, but our laws should be technologically neutral. It uses similar concepts around decentralization. If you meet a mature blockchain test, then the standard of regulation is lower. It separates the notion of the investment contract from the digital token, something that the industry has long clamored for, and this is their criticism of the Howey test, because they say, well, that was about investment contracts, but we need to distinguish that the underlying asset isn't necessarily a security. The Supreme Court never said oranges or orange groves are securities. Courts have made that distinction where they need to. I think we can still rely on the courts to be able to distinguish those things. And this new act would create new exemptions even for capital raising associated with certain digital commodities, again, if you meet this mature blockchain test. So it's very complicated. I'm still, of course, just digesting it. I will have more to say in the future. But I think it would still have the potential for undermining our securities laws, and it isn't necessary in terms of creating a regulatory framework. Now, having said all this, I recognize that doing anything in this environment is of concern. Would we really get vigorous investor protection here, given the dismantling of enforcement activities, given Trump's activities to personally enrich himself. My answer to that is that's another argument for not making it overly complicated, because in particular, I think Trump and the Trump organization will find ways to exploit those complexities. And, for example, there are big exceptions in this new measure for DeFi, for decentralized protocols. They can find ways to exploit those. So my argument is try to keep it simple, keep both agencies involved, don't rewrite the laws significantly, let the expertise of the agencies develop some of these boundary lines and give them, the authority to do that. Thank you.
Thank you, Mr. Massad. I'll call on you now, Mr. Hayes.
Thank you, Congresswoman. Ranking Member Waters and other members of the Financial Services and Agricultural Committee, thank you so much for the opportunity to speak before you today regarding the risks and harms posed by the crypto industry to investors and communities and more. As many of you may know, Americans for Financial Reform and the other organization I represent, Demand Progress, both seek to ensure that we have a financial system that works, that promotes racial and economic justice and works for everyone, not just a select few. And to us, it's clear that the Trump administration's crypto ventures fly in the face of that mission. A sitting president openly promoting speculative crypto business ventures that are launched by his family and used in ways that raise many serious questions, from personal enrichment to pay-to-play politics and more. It appears these breaches of presidential ethics and good governance have little parallel in modern history. But I think the one main point I want to share with you today in my comments, and I look forward to speaking more about the legislative proposals, I really echo the sentiments of my colleagues here previously, and I'm looking forward to that discussion. The main point I want to emphasize is that while it is entirely right for members of Congress to raise concerns about how the actions of the Trump presidency distort good policymaking and threaten the public interest, none of us here should lose sight of the fact that in many ways the Trump family is simply copying common crypto business practices. In other words, many of the potential issues we see with Trump family's crypto ventures are a feature, not a bug, of the crypto industry. And I'd like to share a few examples. So, World Liberty Financial, the platform affiliated with Trump and his family, has marketed itself as a decentralized platform. But from what little real information we have about that platform, it's clear that that venture is controlled by a small set of insiders who stand to profit in an outsized manner from marketing speculative products at the expense of retail consumers and customers. Yet many crypto platforms and offerings are similarly structured. So it's a business model that's found throughout the industry, and it's set up to essentially divorce retail investors from their hard-earned gains in order to create liquidity for high-flying insiders. Additionally, despite the hype that the crypto industry promotes around decentralization, the crypto industry itself is highly centralized in many ways, from the control of governance tokens on DeFi platforms to the concentration of wealth in crypto wallets and much more. So despite this promotion of decentralization as a tool for financial inclusion, whether or not that's true, the industry itself is not centralized or is not decentralized today. And it's a typical industry rhetorical pattern. Use the language and myth of decentralization to justify regulatory exceptions and carve-outs, even when the industry is centralized and even when that means that the players within it and the investors within it are subject to the same risks, the same conflicts of interest, and the same potential for finance and intermediation in traditional finance. Another example is that World Liberty Financial's code base is derived from another platform called Doe Finance, which was a crypto platform that recently suffered a $2 million hack due to flaws and exploits in that code. Hacks like these on crypto platforms and in crypto wallets are a near daily occurrence in the crypto industry, with billions lost by investors, platforms, and consumers each year. These circumstances, this sort of endemic problem with cybersecurity risks and hacks, derived in part from the open source nature of these platform software and their lack of focus on cybersecurity, really undermine the contention that crypto platforms and software are somehow inherently or intrinsically safer or more secure than traditional finance. Yet, as we see in proposals like FIT 21 and other legislative proposals that are promoted by the industry, Rather than seek to raise the bar to ensure that this technology can actually provide people with protections, many of them seek to lower the bar in terms of this kind of risk. Additionally, we've heard about World Liberty Financial's recent announcement that it will use a Trump-affiliated stablecoin to finance an investment by a Dubai-based investment firm in the disgraced platform Binance. But the fact that the nexus involves United Arab Emirates and Dubai is not an accident. Many crypto players have sought out or even lauded jurisdictions like Dubai, the Bahamas, and other offshore financial sectors because of their light-touch regulatory regimes with respect to disclosure, transparency, and, crucially, money laundering compliance. So even as the U.S. seeks to determine how best to exert regulatory oversight over the crypto sector, history suggests that regardless of what proposal is in front of us, many industry actors will continue to seek out spaces that provide maximum opacity, and Trump's platform demonstrates that. Trump's meme coins have already been the subject of volatile speculative activity. We've heard about reports that suggest that while a few coin holders have become rich overnight, and President Trump and his business associates have reaped millions from associated fees, many more have lost significant amounts of money. While it is exceptional that this sort of rags to riches to rags story involves a sitting president, there's nothing exceptional about this pattern. Industry sources estimate there may be thousands of meme coins produced, some say produced each day. Worth little more than the silicon they're encoded upon, these coins fuel rampant speculative activity, little more than gambling. So even if we're in a situation today where the leadership of the current SEC claims they are outside of their jurisdiction, it's clear that most people are speculating on their value for profit. And academics have shown through various studies that most people lose out on those investments, particularly when they're heavily marketed by high-profile individuals with cachet. Yet the industry itself is conflicted about these practices. Some of them decry meme coins as mere speculation, but others celebrate it, calling it an expression of financial freedom. So I could go further, but I'll end with the following thoughts, which is that I hope I've made my point clear. These practices are concerning. They pose a lot of problems for investors and consumers, and they're particularly concerning given that they're practices we see within the administration's own business practices in the crypto sector. But they are also core elements of crypto ecosystems today, and the Trump family is merely following in the industry's footsteps by that measure. So as such, any regulatory approach pursued by Congress needs to keep these systemic problems and practices of the crypto industry at the forefront. Despite the industry's claims, crypto is not special and doesn't deserve bespoke regulatory treatment. Instead, investors and consumers deserve robust, or at least the same protections they'd find elsewhere in financial markets, especially given the risks posed by industry's actions today. Thank you.
Thank you very much, Mr. Hayes. You're now recognized, Mr. Howser, to make your opening statement.
Thank you, Ranking Member, and thank you, members of the committee. It's an honor to have a chance to present today. America's founders were certainly far from perfect, but they were politically sophisticated people. They understood the risk that political corruption posed to our nascent country. Indeed, one scholar has observed that the framers were obsessed with corruption. According to James Madison's notes of the Constitutional Convention, 15 delegates used the word corruption more than 50 times. Corruption was discussed on almost a quarter of the days that the convention was in session. That's why the Constitution includes not just one but two emoluments clauses. The Constitution bars emoluments, a fancy word for gifts or profits, to any senior government officials from foreign governments, as well as by the federal government or state governments to the president, him or herself. So the founders would be alarmed by the advent of cryptocurrency. Ethereum founder Vitalik Buterin has said that cryptocurrencies issued by politicians are a perfect bribery vehicle. Why? Because they afford a degree of deniability that undermines any hope for criminal accountability. So-called meme coins accentuate the problem since practically zero capital or ongoing expenses are required to generate or accept gifts. The way that President Trump made money during his first term came with expenses. So while I may not have been a fan of the Trump Hotel, at least running a hotel is a real business with real, genuine costs. Crypto is not, in that sense, meaningfully real. The ongoing costs associated with having unleashed code on the universe are essentially de minimis. So while Trump seems to have violated the Emoluments Clause during his first presidency, he now appears to be doing so at a vastly greater scale than before. As somebody who's associated with Revolving Door Project, it's an organization that is focused on political corruption in the executive branch and how corporations like to place their people in positions of influence, I'd be remiss if I didn't point out that the administration is replete with figures who are very entrenched in the crypto industry. It goes beyond the Trump family. I'm thinking of Tether banker Howard Lutnick, who's the Commerce Secretary, crypto magnate David Sachs, who's in charge of both crypto and artificial intelligence in the White House. And the business partner of the Trump kids is the son of Steve Witkoff, the roving real estate magnate / shadow Secretary of State. So not only is crypto a well-suited means of corruption, it is also the perfect subject of corruption. Crypto has emerged in less than 2 decades with massive valuations, but without any regulation that its purveyors recognize as legitimate. That means everything from whether or not cryptocurrencies are or are not securities to the obligations of crypto traders to avoid money laundering. These are topics of active debate, as the committee is well aware. And who is debating crypto's future? Not only the president, vice president, and Congress, but various independent agencies, commissioners, and officials at cabinet departments such as State, Commerce, Justice, and Treasury. There's practically no way a senior government official can be invested in the crypto industry without a conflict of interest. And there's no way to be sure that any government official with connection to the distribution of digital assets isn't themselves subject to difficult to detect but potentially highly lucrative emoluments. Current ethics laws fall far short of being able to address the challenge of crypto. That's why Ranking Member Waters' proposal that elected officials hold no crypto assets makes sense. Indeed, I believe that proposal could be extended to cabinet secretaries, senior congressional staff, federal judges, and other senior government officials. Am I worried that some people might not want to serve in government unless they can engage in crypto marketing and speculation? I am much more worried about our government if it is run by people who care more about crypto profits than serving the public. Thank you.
Wow. Let me start with Ms. Murphy. I know you as well as the rest of the public just saw the market structure text. But as of right now, is it your understanding that there is no provision in their bill to ban the president and his family from owning and issuing cryptocurrency? Without this ban, Trumpo and his circle of insiders can continue profiting off of his crypto companies and receiving bribes anonymously. We've heard very troubling reports of Trump's web of crypto ventures, which he is using to create an avenue to enrich himself and his inner circle. The discussion draft posted for this hearing would ban the president and members of Congress from owning crypto assets and firms. Ms. Murphy, do you agree with this approach? Are there other provisions that must be included in any market structure legislation to address our concerns?
Must ban the president, the vice president, Congress, anyone holding a federal official office from owning crypto assets or crypto firms. Without that type of prohibition, we are essentially legalizing political office in a way where it could be for public profit. But more importantly, we're allowing for public officials to determine what regulation could be helpful or not helpful to their bottom line. It's not just an ethical issue, it's an issue of national security. By allowing somewhat anonymous transfers via blockchain, it creates a pathway and a source for foreign governments, for lobbyists, for bad actors to channel money to the president and his inner circle. And that's not hypothetical, that's actually happening in real time. Any legislation should consider beneficial ownership transparency, which is what your legislation includes, anti-invasion rules, prevent officials from using trusts and DAOs and shell companies or wallets, independent audits or compliance mechanisms, and a mandatory divestment upon taking office. Similar to traditional financial holdings, officials really must divest from assets, similar to how most of us have had to do even entering into working in federal office, as I did at U.S. Treasury.
Thank you. Mr. Howser, since the start of this administration, I've warned that Trump has created an avenue to circumvent national security and anti-corruption laws through his crypto businesses. For example, a state-backed Abu Dhabi fund will be making a $2 billion business deal using Trump's stablecoin. Trump's actions are key examples of how authoritarian regimes do business. And to make matters worse, the United States president has recently rejected the importance of the Constitution. He has captured legislation known as FIT 21, opened up a myriad of loopholes that could lead to less protections for investors and chaos in our country's financial markets. Just yesterday, Republicans came out with an updated version of FIT 21. One of my main concerns last year was that, like the unregulated derivatives that led to the 2008 financial crisis, crypto issuers would have free rein to carry out risky activities under this bill. Now that Trump has his own crypto schemes, this has become an even more highlighted concern. Mr. Howser, what provisions are necessary to prevent President Trump, or anyone else for that matter, and his companies from profiting in a regulation-free zone if these provisions are not included? Can you explain the resultant threat to financial stability?
Thank you, Ranking Member. It is very difficult under current law to imagine anything other than corrupt outcomes from this statute and the president's ongoing business activities. Much needs to be done. I agree that the president should not be allowed to be involved in ownership of cryptocurrency, as it is the topic of such incredible policy debates at this moment. So it's inherently a conflict of interest. I think the president should also not be allowed to be involved in the marketing of cryptocurrency, because it is the best possible mechanism to receive gratuities, to receive the emoluments that the constitutional founders feared a president would receive. I think we also need to look back at ongoing attacks on independent investigative forces across the executive branch. The decline of inspectors general. We've seen almost every inspector general fired. That's a real problem. We've seen the DOJ has a national cryptocurrency enforcement team, or at least it did for the last few years. President Trump ended that because he does not want people whose job it is to undermine corruption. And because one of the best use cases for cryptocurrency right now, things like money laundering, ransomware, that's a lot of where the value in the cryptocurrency space comes from. So I think we need to look at how the president is attacking law enforcement, and we need to buttress that. And we should also, as my colleague, Ms. Murphy, has said, no one should be able to enter government and own the cryptocurrency assets.
Thank you. Mr. Massad, I was concerned last Congress that the Republicans' crypto market structure legislation, known as FT 21, had opened up a myriad of loopholes that could lead to less protections for investors and chaos in our country's financial markets. And so, again, Republicans came out with an updated version of FIT 21. And again, one of my main concerns last year was, like the unregulated derivatives that led to the 2008 financial crisis, crypto issuers would have free rein to carry out risky activities under this bill. Now that Trump has his own crypto scheme, this has become an even more heightened concern. What provisions, I want to ask you too, what provisions are necessary to prevent President Trump or anyone else for that matter and his companies from profiting in this regulation-free zone?
Thank you, Ranking Member Waters, for the question. With any other president, there would have been bipartisan outrage at what he's engaged in, what he and his family have engaged in. We need a prohibition on it. We need a prohibition on the president and the vice president and the members of their families from being involved in any crypto-related business, whether as an owner, stockholder, director, or officer. It's unfortunate that Republicans won't speak out about this. I think when you then put that in the context of the legislation we're debating, the risks do increase because the complexity of this legislation, the market structure legislation, will create, I think, further opportunities to exploit the laws for personal gain. And that's why I argue for, keeping it as simple as possible in how Congress writes it, directing the agencies to create the regulatory rules that will address fraud and manipulation and speculation. And, Congress would articulate the core principles, but then leave it to them to develop rules. Of course, there's a risk that with the current leadership, you wouldn't get something that strong, but I still think that's better than the current legislative proposals, which I think would create cracks in our securities law foundation. And the same is true, on the stablecoin side. We can talk about that too. There's huge risks there, I think, given that they've already launched a stablecoin. If we don't have a very strong stablecoin bill that regulates offshore issuers, that gives federal authorities a line of sight into the largest issuers, and particularly with respect to these exemptions for so-called DeFi in both bills. And Mr. Hayes commented on how they use the language of DeFi to justify things that are hardly decentralized or autonomous or without governance. That's very common here. And all of these protocols often have control vectors. There's someone involved. And even in the language that they've written in these bills, it's extremely broad as to what would be exempted. So I would avoid those exemptions. Again, you've also got to give Treasury more authority on the illicit finance side. We can talk further about that.
Thank you. Before we call on the members, Mr. Howser, I'm going to go back to you. How must Congress rein in and hold accountable the predatory ambitions of the Trump administration? How do we protect the U.S. from this coup d'etat before it's too late, especially as members of the Financial Services Committee?
So these are big questions. I think that the founders definitely thought that one of the key enforcement mechanisms of the Emoluments Clause that has to be on the table is impeachment. In the first Trump administration, there was significant efforts to enforce the Emoluments Clause and its apparent violations in court. There were lawsuits brought by the congressional Democrats. There were lawsuits brought by hotels that were competing with the Trump Hotel, civil society organizations, and the courts between playing games with standing doctrine combined with just judicial lethargy and moving very slowly. Those lawsuits were ineffective. Now, obviously, impeachment is not something that's meaningfully going to occur in the foreseeable future. But I do think that efforts to bring forth more bipartisan awareness that these values in our Constitution about anti-corruption really should go beyond party. And I understand that people are trying, and it's not an easy task to make people see past partisan polarization in 2025. But I don't know that there are really any steps short of that are going to get in front of this freight train.
Well, thank you very much. Mr. Chairman?
Thank you.
First, I want to commend my colleagues for being here. It takes a little bit of courage when all the money and power is on one side of this argument. The Enforce Our Tax Laws organization does not have a PAC. The anti-money laundering people do not have a paid lobbyist. We're all aware that the crypto industry spent $45 million against Sherrod Brown last year. And if you haven't been threatened by crypto yet, you soon will be as soon as they watch this tape. Mr. Massad, thank you for focusing on the importance of our capital markets, our $120 trillion capital markets. As you point out, our economy is dependent upon the animal spirits, the willingness of people to risk and to invest. And we provide, perhaps too generously, hundreds of billions of dollars of tax incentives through the capital gains allowance, the step up in basis upon death, et cetera, to encourage people to invest in companies that build factories and discover new technologies and build the economy. And now instead people with an interest in making money and with some animal spirits willing to take a risk are investing in mongoose coin and hamster coin, which does nothing to build our economy. But of course they get the same tax incentives. You get a capital gains allowance for investing in hamster coin. There is no upside to having the officials in the U.S. government buy crypto. Investing in stocks, I at least see that you want them actively involved in building America. But where's the upside for investing? And we're told that by the crypto industry that this is something new and we can't be left behind. And oh my God, China's... Look, Peru is ahead of us in cocaine cultivation. China is ahead of us in organ harvesting. And the Cayman Islands is ahead of us in nefarious, hidden financial transactions. We can afford to have a few areas of the world where we're not the leader. Mr. Howser, you correctly point out how important corruption is and was to the founders of this country in preventing it. I would venture to say that the wealth of nations is dependent more on one factor than any other, and that is whether they have an honest government. And there is no reason why Singapore is wealthier than Kazakhstan, except one country has corruption and the other one does not. Crypto is the perfect mechanism for bribery, for straight-out bribery. We've seen politicians go wrong, and they get caught with big wads of $100 bills. Of course, crypto solves that problem for them. And then there's campaign contributions. If one of our colleagues is in jail for about 10, 12 years ago, if somebody wants to funnel campaign contributions, they used to need to find real humans to make the contributions. It's a straw man thing where somebody gives $30,000, splits it up into 10 pieces, and inevitably they get caught because they've got 30 co-conspirators. Now, you can make unlimited $199 contributions in crypto to any candidate that accepts crypto. There's no way for there to verify who's giving the money. You just have to make up a name. Jack Smith, $199, Mary Smith, $199, and you can make unlimited contributions as fast as the computer will operate. And then finally, if you let's say you're a little bit more honest than those two things, and you just want a disguised way to curry favor, you do what we've already seen. You create a cryptocurrency, you own virtually all of it, and somebody buys it. And virtually all the money goes to the person who owns it. So I want to focus on a couple of examples here The first one was not created by, if you have the chart, Vilas, this one hasn't gotten the publicity it needs. The day that Trump was elected was a good day for crypto. And in fact, in the following week, Bitcoin went up 22%. You don't have to have any inside information. Everybody's watching the results. As soon as they called Michigan, it was over. So 22% makes sense. But one cryptocurrency went up in 1 week by 135%. Somebody knew that that currency was going to benefit in a special way. That currency, if you can hold it up, is Doge. 1 week after Trump was elected, they announced the name of this agency. What a peculiar, weird name. Who could have possibly guessed that they would call it Doge? I thought it was incredibly strange until I realized that meant that anybody who bought Dogecoin the day that Trump was elected and knew that this agency would have the strange name increased their money by 135%, 6 times as fast as Bitcoin. So Mr. Musk, I can't imagine, didn't know the name of the organization that was going to be announced 1 week after the election. $37 billion was made by people who knew, in 1 week, by people who knew how much that this weird government agency would have the very peculiar name. The next chart I have is Trump coin, just to illustrate that if you buy Trump coin, 96% of the money is going to 40 wallets. That could be one person, could be 40, could be one family. But this is not a decentralized currency, and anybody can walk up to Donald Trump. Well, you actually have to give $1 million, $2 million to get in the same room. But once you do that, and just say, I'm account number 1347632, and I bought $100 million worth of Trump coin yesterday. I think Donald Trump would just say, thank you very much. My family needed even more money. But I want to focus finally on the recent Abu Dhabi issue. Apparently, Abu Dhabi, the United Arab Emirates, has invested, and I want to thank Mr. Kasten for bringing this to my attention, $2 billion worth of a new Trump stablecoin. Talk about oxymorons. Now, I should ask any of our witnesses, this stablecoin doesn't pay any interest, right? The vast majority of stablecoins? Correct. Okay. So this is a $2 billion interest-free loan, which makes it a better bribe than just transferring $2 billion. If you give Trump $2 billion, he might change his mind tomorrow. The money's gone. But if you make an interest-free loan of $2 billion, that's a guaranteed $80 million a year profit. And if for some reason Donald doesn't do what you want, you pull the money back. So we see here, I mean, I used to think that crime is something that happened in the dark that nobody saw. Apparently it's not illegal if you announce it in the New York Times at a big conference in Dubai. But apparently we see some, and do I have that right? If you invest $2 billion in a stable coin, you're in effect making an interest-free loan of $2 billion to the promoters of the stable coin?
Yeah, I think that's an accurate starting point. And what I would add is that, it depends on the structure of the stable coin, but if you are buying stable coins from an issuer, you're essentially giving them your money, and they're putting that into reserves. Now, many stable coin holders will hold on to those reserves in a form of interest-bearing assets. So, in effect, the business model is to earn profits by holding those assets in reserve. So not only are you giving this other partner an interest-free loan, you're giving yourself the opportunity to make easy money on the reserve assets while it sits there.
Good. I think I've taken enough time.
Thank you. Mr. Caston.
Thank you for doing this. Madam Chair, really appreciate you for your fortitude here today. I want to just, I don't know if you all noticed, there was this little funny business before we started. We all have these water bottles in front of us that don't have labels on them. We had labels at the start, and House ethics rules required us to get rid of them. There's two takes we could have on that, right? We could look at what we're doing here today and say how remarkably naive these members of Congress are, that they took away bottles with names because we don't want to use the power of our office to put a bottle of whatever brand it was in front. And we're just naive. Or we could say, thank goodness that somebody in Congress is actually standing up for ethics. I hope we conclude the latter. I fear that people watching this are probably thinking the former. And I say that because there's this tremendous gap with all of this crypto regulation. We're talking about this as if this is some complicated thing that unless you understand all the acronyms, you don't understand it. But at core, there's massive ethics violations, and there's a lot of things that are legal but unethical. So, legal standards are lower than ethical violations, and there's a lot of things that are unconstitutional but are not illegal. And so, to your point, Mr. Howser, there are gross emoluments violations here. But I want to just try to understand, and I'm going to try to be as efficient as I can with my time, realizing I've already spent too long on my intro. But for those of us who are legislators, we are trying to figure out, is this a problem that we can only solve with new legislation? Or is it a problem where we have criminals who are already violating existing law and we have a problem of enforcement? And, because as we think about how to aim our fire, is our problem primarily the criminal? Is our problem primarily our colleagues across the hall who are refusing to do oversight? Is our problem primarily the DOJ? And I just want to make sure that we understand as we think through this, recognizing that not all of you are lawyers or, have those experts. I think we have to understand that. And I guess, Mr. Massad, I want to start with you and particularly some of your testimony before the Senate Banking Committee. There was this really weird, I think transparently unethical thing that happened. There was this meeting in the White House where they brought 220 people in who could buy Trump coins that coincided with the issuer of these Trump coins, being the Trump family, said that we're going to extend the lockup period. So they had simultaneously depressed the supply of Trump meme coins, unbeknownst to the market, on the same day they were creating an event to increase demand. So I guess you had talked about this, and I'd just welcome your chance to sort of walk through, some of the conflicts of interest you see there. But within the context of my first question, this is obviously unethical. It sure looks like a pump and dump scheme, right? Or is the real play here that we should be worried about that there's this goofiness in Trump coins in meme coins, where you can be the broker and the issuer, and therefore even if it's not about pumping the securities, it's about making the brokerage fees. Can you just walk us through where your concerns are and where we should be focusing?
Certainly, Congressman. Thank you for the question. I would say that before the events of the last several months, none of us thought we needed a prohibition on a president engaging in businesses while in office, particularly businesses that could benefit from his actions as president. That's where we are. Whether Congress can do anything about that, I leave to you all. But I think ideally one would prohibit that. That's a current problem. We've had another problem, though, for now more than a decade, and we haven't done anything about it, which is we have this technology, which may be very useful. I think it could be a source of innovation, but it's led to the creation of a lot of digital tokens that are traded in markets that have no federal regulation. And therefore, we have a lot of fraud, we have a lot of manipulation, we have a lot of lack of disclosure. We certainly have conflicts of the type you're talking about, where people might launch a coin when they know certain things that they haven't disclosed. And the question is, what are we going to do about that? And we do need to regulate it. And I'm saying, if you regulate it, you might tamp down not just the fraud and the manipulation, but you might tamp down some of the speculative activity. And you might at least cause more of the innovative energy behind this technology to be directed toward more useful uses. And I'm suggesting let's try to regulate it in a way that doesn't screw up our capital markets.
So I want to just pick on that for a second, because I'm all for innovation. I also, I agree with what Brad said that, not all innovation is clean. I tell people all the time, Walter White was an amazing innovator. That blue meth was really remarkable. Satoshi's white paper came out the same year that Apple introduced the App Store. Nobody questions what the purpose of the App Store is at this point. But at some point, its design is what it's doing, right? Mm-hmm. And you would use the example in your opening remarks about that no court's ever had to rule whether an orange is a security or an orange grove is a security. I think clearly if you and I were to, offer shares to build an orange grove, that would be a security, even though we recognize that the orange was the commodity.
Right.
What is it about crypto that makes it at all unclear? Now, recognizing that, the SEC under Trump has just ruled that apparently the orange grove is a commodity. But what is it that makes it at all unclear that there are existing rules that says you can't be the issuer and the broker because there's such obvious conflicts of interest? Like, how is that not illegal under existing law that we need to craft laws to protect against that innovation?
We don't have a federal regulator of the spot market of commodities. There is no federal regulator of that market. So to the extent these are not securities, and I agree we should be able to decide that under our existing laws. That's why I don't want to rewrite those laws. The question is, what are they? And they've generally been deemed to be commodities. I take responsibility for part of that, having said Bitcoin was. That also goes back to a very broad definition of commodity that, frankly, Congress might want to reconsider at some point. We can talk about that another time. But the point is, you've got these things out there, these digital tokens. Insofar as they're not securities, they've been deemed generally to be commodities. Maybe some of them aren't even financial in nature. Maybe they're just pure gambling.
And I guess I don't mean to cut you off, but I know everybody's going to have their time here. But my example of the orange grove is that we don't dispute whether the issuer of oranges in attracting capital to their business to issue oranges is a security.
Right.
Even though we agree that the orange itself is a commodity. And so that's my point on the conflict of if you're sitting there saying, I have a license to mint Trump coins,
right,
and then I can sell them during the brokerage fees. That's a little different from saying the coin itself.
Agreed. We don't dispute that if someone has a business of selling oranges or raising orange groves, that business, and he's trying to raise capital for that business, that's a security. But I would say the comparison is more, we don't have a federal regulator of oranges or of orange, well, maybe we do, but I don't know, I don't think we do. But we've got these instruments that are easily transferable because of the nature of the technology that are being used, that a lot of them are being created, and it's an easy market in which to issue something. It's an easy market in which to engage in pump and dump schemes. And the question is, what do we do about that?
But just one last question for everybody. We've been talking about the meme coins. I've not been talking about this DeFi operation, World Liberty Financial. My understanding is that the governance tokens for World Liberty Financial are freaking bizarre.
Mm-hmm. Yes.
It says that they're locked from being traded. Their holders are prohibited from voting to be paid a share of profits. Any vote to breach the existing deals with Trump would have no force. I guess I understand why that's not a security, because you'd have to be an idiot to have an expectation of profit.
Well, I don't necessarily agree with that. I think
but I just ask, why, other than emoluments, why would somebody buy that security?
I'm sorry, why would
somebody buy that security? It's entirely illiquid. There is no market for it. Other than currying favor with the President of the United States, what is the possible economic logic for buying that security? Or token, if we want to call it that.
I don't see one, but obviously a lot of people have bought it. And again, the question is, we're not going to necessarily change their minds, but should we at least create a regulatory framework where maybe there's not as many suckers out there, if you think they're suckers, and at least create a regulatory framework where we require adequate disclosure, we prevent fraud, we prevent front running, we prevent people from kind of pumping and dumping things. That's
I guess
where I'm coming from.
my concern, and I'll yield,
If I could just,
my concern is that
please go.
you don't buy it because you're expecting a return on that. You're buying because you're expecting something else.
Probably so.
If the chair will entertain, I'm sure I'm out of time, but go ahead, Mr. Hayes.
Well, very quickly, I appreciate the time. I was just going to say, one could argue people are buying it because they have belief in the platform itself, right? They believe that their investment will return profit based on that. And that actually comes closer to the definition of investing in security because you're expecting profits from the efforts of others. In this case, the efforts of others are a platform that's hopelessly entangled with politics, and that profit is not going to come from a legitimate business activity, but from the ability to curry favors and influence to generate profit for the platform. So that might be another way into that conversation. It's not mere influence peddling. You're latching yourself to the coattails of a questionable enterprise, if I may.
So that's predicated on the idea that you could trade the token, which you can't under the rules of that token.
True.
Well, or if
someday.
I may add, if you even get some return, maybe, the Trump family is supposed to get 75% of the return, whatever, or 60%, I guess, from operations. Even if you just get a little bit of a return on that token and can't trade it, it could become very valuable precisely because he's the president. I can see World Liberty Financial engaging in a lot of things where they could make a lot of money, unfortunately, and you might do quite well. I mean, that's another reason why I think it's a security, even if you can't trade it.
Investing in Walter White for the dividends. I yield back.
Thank you. Thank you very much. Ms. Garcia.
Thank you, Madam Ranking Member, and thank you for your leadership in recognizing that the joint hearing, as it was called, because our rules don't provide for joint hearings. I guess it was just one huge round table, and I, for one, appreciate the square table because I tend to get a little dizzy with anything round. But thank you for putting this group together because I think it's important that we really focus on it. And, there's no other reason but influence that World Liberty Financial Team exists. And to underscore that, all we have to do is visit their own website, and we see Donald Trump listed as Chief Crypto Advocate. So that's just to remind anyone who even just researches or looks or even is kind of curious of who is leading this team. And then next to him are all the sons, Eric, Donald, and even Barron now. He's not even out of college, and he's already part of the team. So there's nothing in my mind that this is meant to do but to remind people that the President of the United States is the top gun here. And, of course, we've always had, even in the first term, concerns about his dealings. I think he signed some sort of agreement. I'm sure all of you are aware of it this time around. But he didn't say he was not going to be in control of any of his companies, which is the bottom line here. So the last I checked, he's supposed to be focused on being our president. So clearly the general public needs to be concerned about whose interests he has in mind in any of his dealings, whether they're domestic or foreign, or anything to do with waste, fraud, and abuse. I think it begins within his own companies. So instead of prioritizing his job as our nation's leader, he is using his position to strip financial regulators of their independence, all to line the pockets of his friends and his family, many of whom now are listed, as I said, as members of World Liberty Financial Team. This is such a direct, obvious, in-your-face conflict of interest that I, too, agree. I think one of you said that, I think it was you, sir, from Harvard, that it makes no sense that there's no bipartisan outrage on this. There should be. Poor Billy Carter had little Billy Bear, and everybody got all excited about it because he was using the prestige and power of his brother to try to sell beer. I don't think it even sold. And it certainly wasn't much for a six-pack compared to what we're doing here in talking about billions and millions of dollars. So I think it's just outrageous. And when a company that lists a president as his chief crypto assistant is just clear signal that the president and his family are in it for the cashing in. Many people talk about his administration as being in chaos. Some of us that concerned about our civil rights and our due process rights are concerned about the cruelty that he has exhibited towards immigrants. Many of us talk about the corruption, but really it's the cashing in that's the most horrible. I think one of you said, and I think it was Mr. Hayes, that he's basically following in the crypto footsteps in terms of what he's doing with a company. But none of us can agree that that makes it right. And no one of us can agree that, because when you look at it, he's not following the footsteps of other presidential families, and that should be the test. Not whether or not he's really just doing what all the other crypto people are doing. It should be, what is he doing outside of the scope of what the four founding fathers in Madison and others thought about? They all must be rolling in their grave. And when I see that for some of us as members of Congress, I was at the Cinco de Mayo parade this weekend. Do you know that it violates our ethics rules for us to have the seal on our cars, and we can't use staff because it's not considered an official function? So we would be in violation if we did. We can't be in a parade, but the Trumps can parade around the country and around the world, setting up. They just announced a deal, 6 more hotels around the world, including in Dubai and some other, I think, Vietnam. You know, they can parade around and do what they want, and we can't even be in a little parade in our local town officially. Something's not right. And, sir, I don't know if it's impeachment. I was impeachment manager, impeachment 1. We all remember the quid pro quo. That's the way he operates. So you know that if he has 6 hotel deals in 6 countries, there's a quid pro quo in there somewhere. So my question to all of you, and I know it's a tough one because you've been asked before, but, you know, what is it that Congress can do? Or is it really just the courts, or is it really just impeachment? There's got to be another remedy somewhere. And I'll start with you, Ms. Murphy.
Thank you for the question. I'm going to echo maybe what I've heard from Mr. Massad and Mark and others. I do think there needs to be a federal framework. I do think that we need to establish where security should be regulated under the SEC, under the CFTC, that stable coins that look like banking products or deposit-like products should be under prudential framework. And we should be thinking about where there's a proliferation of those two products. I think the crypto spot market, as Mr. Massad has said, is an open gap, and it's unregulated. So there needs to be an overall federal framework to regulate all of these products to ensure that consumers are protected, to ensure that our deposits are protected, and those crypto investors that are trusting the market, they should feel like they can make certain investments. They can operate in the market without necessarily having to worry about fraud or scams. So I do think there needs to be some overall framework, prudential framework, and securities framework for regulating cryptocurrency. And I look at Ranking Member Waters' her prior bill on stablecoins and other bills that we've considered in Congress as well.
Right. And now, Mr. Massad, you mentioned boundary lines in your remarks. So what boundary lines would you set?
Well, again, first, with respect to the personal enrichment, there should be ethical rules that pertain to the president and the vice president. But whether this Congress is going to do anything about that seems doubtful.
And who would enforce those rules? You've got an attorney general that blindly does.
Well, let's start with whether we can pass the rules, I guess. But at least you'd have rules if you could pass them. But given that seems highly unlikely to happen with this current Congress, I'm focused on what can we do about this crypto market, which is where the Republicans do want to pass legislation. And that's where I'm saying we need to regulate this market in non-security digital tokens without undermining our securities laws in ways that keep it relatively simple so that we don't create a lot of exceptions for so-called DeFi protocols and all sorts of things, and that ideally, in my mind, brings the SEC and the CFTC together to do that job. Now, again, you could say, well, are they really going to engage in vigorous enforcement? That's what we've got. Okay?
Well, my biggest concern with that is that I just don't know. I mean, how long would that take?
What
is happening now, and we've been talking about this at least since I've been here.
We've been talking about this for 10 years.
Well, I haven't been here that long.
I mean, I first started testifying about this in 2014, so 11 years. You got to start somewhere. And again, the Republicans are primed to pass market structure legislation. They're primed to pass stablecoin legislation. So it seems to me you focus on how can we make those bills as good as they can be. What the ranking member did with the former chairman of this committee last fall was terrific on stablecoins. It's too bad.
We agree with that.
Too bad we didn't get that.
Okay.
So
Hayes?
now we're working with a worse bill. But, you know, you asked about World Liberty Financial and why would anyone buy that coin? Let me give you an example on how it plays into stablecoins. In my mind, again, what I know about World Liberty Financial token is I would say it's a security because I think you're entitled to potentially to some gain from World Liberty Financial's operations. World Liberty Financial has now launched a stablecoin. One can imagine that stablecoin really taking off and making lots of money. Maybe they do a co-branded deal with Amazon so that their stablecoin is used for all of Amazon's payments to China.
Well, there was a phone call, and the first impeachment started with a phone call.
You know, and maybe then that gets some kind of tariff relief. I mean, I can come up with lots of scenarios for you.
I can too, but I need to go on to.
Okay.
Sure, no problem.
Mr. Hayes, what about you?
Well, a couple ways to answer your question.
Business unusual in the crypto world, but it's not acceptable in the presidential world.
Of course. Thank you, Congresswoman, for the question. Yeah, I think one addition to some of the comments others have made here, which I'll offer, I agree with a lot of points that Mr. Massad has said, but I think one area I'm a little different is if we're taking the adage of first do no harm seriously, which I think was a good point that my gentleman raised, it's important to get financial regulations right the first time because we've seen often how inadequate frameworks end up amplifying some of the risks we're trying to address. We saw that in the lead up to the financial crisis. We saw that in the lead up to with the passage of things like the Commodity Futures Modernization Act, other things like that. We don't often get many opportunities, and in this environment, it's going to be very difficult to pass rules. It's difficult to imagine a piece of legislation that the president right now would sign that would also meet the standards that we expect from independent financial regulatory agencies, that also meet the standards of this body. I think that one way to think about what we can do in the meantime is that financial regulators' role is not purely to regulate financial markets, but to establish the standards we know those markets need to work at with integrity, right? People will believe in our markets not only because they're liquid, but because they operate under the rule of law. And there are many disclosure requirements, not only in the SEC's regime, but in the state securities regime that have helped us police the crypto industry in the past. There's been a lot of focus on SEC enforcement of existing regulatory rules, and rightly so. But state securities regulators have levied as many or more regulatory actions against crypto actors, not only issuers, but the platforms that post those assets on their platforms. So we can get at the integrity of markets and the integrity of actors in those markets through existing financial regulatory reforms if we back up our regulators today. Unfortunately, some of the proposals we've seen to regulate digital assets like FIT21 actually undermine the ability of state regulators or undermine the ability of individuals to take private right of action. So we don't want to go in a direction where not only are we creating loose regulatory structures that we know federal regulators may not enforce, but that undermine other regulators' abilities to protect their citizens and fulfill their obligations to the people they represent.
Lastly, Mr. Howser.
It's a real challenge to figure out how Congress can address this. I think hearings like this are a good first step, and because I think public education is critical. I think confronting the corruption and trying to make the corruption front and center in our national conversation. I think corruption applies to all sorts of other issues, be it the execution of the anti-immigrant agenda to tariffs and all sorts of other issues. But corruption should be kept front and center. It's a unifying theme. But we need to have a large public conversation and build up public disgust at this corruption, because I think in some ways the real villain here is the unitary executive theory, which has been a problem in this country for a couple of generations, going back to the Iran-Contra scandal and earlier. You have this sense that the president controls U.S. attorneys' offices, that inspectors general can be fired at whim, and that laws don't apply to the president. And you saw that in the Supreme Court decision saying that the president cannot be held criminally accountable for actions in office. And this sort of series of nested actions based off of what I think is a really kind of horrifying political philosophy around the notion that the presidency is embodied wholly and entirely in one person, and anything that is part of the executive branch power is part of that president person. That view really gets in the way of a country that is ruled by law. Because if the president can do whatever they want, and if they're the one in charge of the executive branch, and only the executive branch enforces the law, that's really a problem for Congress. Because how Congress governs is by passing laws. And so, going back to Iran-Contra, if the president doesn't have to follow the law, or if the president can violate the law and get away with it, that's a huge problem. And so I think we need to build up public disgust at the notion that a president is above the law. And that is a long endeavor, and that's why I thank the ranking woman for holding this hearing, because it is the beginning of the types of steps that are required, I think, to push back on this notion of an imperial presidency, which is what the unitary executive theory is all about.
Right. Obviously, no one's above the law, especially the president. And with that, Madam Chair, I yield back.
Let's see, who do we have next? Mr. Lynch?
Thank you. I don't know where to begin, to be honest with you. Everything that's going on here, I don't want to repeat what others have said. Mr. Foster, Dr. Foster, have you asked your question about, this license plate type theory where we would actually remove some of the transparency?
No, I was.
Why don't you do that?
Oh, okay. Well, so, one of the issues that I've been struggling with ever since crypto emerged, well, actually, the two main issues were anonymity and finality. And we have never gotten straight answers on either one of those. I think absolute anonymity is a disaster. You can't stop ransomware. You can't stop corruption. You can't stop anything. And so what you need is some form of controlled anonymity. Some KYCing wallets, for a mandate that all wallets must be KYC would be an example of that. Another one, which is it's an analogy with automobiles. You can think of the crypto industry as saying, now just imagine that someone invented the automobile and it's going to be wonderful, transformative, but it will be a disaster if you mandate license plates on cars. And then you'd end up with, unlicensed cars with unlicensed drivers going through your neighborhood, crossing your borders, all sorts of bad things happening. And so we've come to this controlled anonymity, where if you're driving down the road, you see a car with a license plate. You do not know who owns that car or who's in the car, but you do know that there's a legally traceable person responsible for that car's operation. And that is, so doing something like that for wallets, to have a digital license plate. It can be more anonymous than just a straight license plate. It can be sort of similar to, James Bond's license plates, the ones that rotate over. These are algorithmic wallets, as they're called. So you actually can't trace the same car as it wanders around. But for any one of these plates, if you prove a crime has been committed, you can go to a trusted entity and figure out who that person is behind that wallet. And so it seems something like that is a huge missing piece in this. You simply can't, if you ask why is it that the NFT markets have collapsed in a wave of, wash trading and front running and everything else, it's because they allow fully anonymous participants, and you can't detect wash trading. But if they had license plates, you'd know there was at least one regulator who could see the true identities behind both sides of a transaction and identify wash trading. So it seems like that that kind of exists. Our regulated markets have developed that because there has been no alternative. And it seems like, and sometimes I'm struck, this whole bill that just got dropped last night, I guess, or the night before, it strikes me as being 212 pages of regulatory arbitrage. That it's just, the whole. Anyway, so specifically, if you have some ideas on how to deal with the controlled anonymity, what are the ideas that make sense to you? I guess, Ms. Murphy, you want to start and just go down the line?
When you say controlled anonymity, you mean like how we can potentially anonymize transactions or investments? Yeah,
in a controlled and legal manner. Are there mechanisms that you've encountered that strike you as sensible way forward that would allow most transactions to be anonymous and still, when a criminal activity has been uncovered, figure out who it is behind it?
I think the same way that we treat cash, right? There's a 10K cap in terms of what is traced and what is tracked through AML, CFT, what is happening in terms of illicit finance. Anything under 10K that is specifically anonymized. I do think there needs to be some anonymity. I think that the Republican Party, Trump, they've sort of hijacked this idea that privacy, surveillance, those are ideas of theirs, but it's really to help line their pockets, right? There is another side of this discussion, right, where there are people marginalizing communities, low-income communities that are facing some level of surveillance that do need to be anonymized, who have questions around privacy, who would like to transact and not necessarily have to worry about if their information is going to be, sold or shared with DHS, and that they would be potentially deported. So there's two sides of the coin. I think one side of the coin is I've seen sort of Trump, his allies, the Republican Party, sort of say, there needs to be anonymity, but for the reasons that they've promoted, fraud, scams, for them to privatize our public goods in a way and access our data and market that stuff to us. Then there's the other side, or the need for anonymity and controls, which is very similar to how we see cash, and making sure that there are people can transact and not have to necessarily worry about being surveilled by government that could potentially share information with law enforcement in a way that could
it's a banking system. One of the main functions of banks is sort of to have controlled anonymity in bank-to-bank transactions. Mr. Massad?
Sorry.
Oh.
Thank you for the question, Congressman, and I agree. The anonymity problem has to be solved. In a sense, blockchain gets it backwards, right? Government can't identify someone, and yet everyone can see all my transactions if they know who I am. What you want is a system where government can identify someone that they think is a bad actor, but the rest of us have a reasonable basis for privacy in our financial transactions unless that's necessary. Okay. One is the technical solution, right? That we develop technology where people have to have a verified identity in order to transact on a blockchain. You and I have talked about this before. And, a lot of technology people tell me, oh, yeah, that's doable. So maybe we need to think about how do we create legislative incentives for that to be adopted so that...
I think the tool at hand, most of us have probably gotten our real ID by now. And putting that on your cell phone gives you these so-called digital driver's licenses, allow you to authenticate online as a legally traceable person.
But you could write into the stablecoin bill, if we thought this technology was at hand, we would say stablecoin issuers have to program their smart contracts to not accept a transaction unless someone has that digital identity that they can ping when the transaction is pending and verify they've been cleared. It's like TSA pre. Okay, that's one solution. If we can't do that, then we can create other incentives to push activity into hosted wallets. Imagine if we said, banks, yes, you can have custodial wallets for your customers to accept stable coins, but they can only accept payments from other hosted wallets, not from unhosted wallets. Or there's some kind of regulatory disincentive to take payments from unhosted wallets. Now, that will run us headlong into those who say the right of Americans to transact in unhosted wallets should never be limited, whatever. We're not limiting it. You just have to have that credential. So I think that's how we have to start thinking. Either come up with a technical solution or push activity into hosted wallets.
Mm-hmm. Mr. Hayes?
Thank you, Congressman. A lot of the comments I've heard I would agree with. I think I'd add a couple layers. So first of all, technologists in the crypto space recognize the tensions that you've identified and others identified between anonymity, security, and stability. I'm not going to render it exactly accurately, but it's often referred to as the trilemma, right? Opposing values that the industry has embraced around anonymity versus ability to transact versus stability and compliance. And if you read that material and outside of kind of a more public debate, you'll realize that people acknowledge that it's very difficult to resolve that trilemma or that tension without making some concessions in one direction. Either you're going to create a system that is inherently dependent upon sort of pseudonymity. It's going to be very difficult to ever find a way to deal with some of the problems caused by it, or you're going to have to accept some sort of concession around intermediation. And what I would argue is that often the industry presents regulatory compliance with things like anti-money laundering laws or other forms of compliance as inhibiting innovation. But when you look at regulatory activity in other spaces, like I used to work on vehicles, for example, robust, consistent regulatory standards can actually drive innovation, can make those products better. And I think that if the industry were really willing to sit down and recognize, okay, these are the standards, they apply to everybody, how can we innovate within that, you would find solutions to explore some of the technological things you're describing. But until members of the industry recognize that there has to be some move in that direction for consistent compliance, we're not going to find a tool that provides some degree of anonymity and some degree of transparency that is commensurate with what we're all looking for. And the last thing I'll say quickly is I also think there's a notion that we're assuming blockchain is the tool for this, right? There are hardware solutions that we could use that mimic the properties of cash. Congressman Lynch, I believe, has introduced legislation before around eCash, where if you are looking for a way to transact anonymously without getting embedded in this broad international system that facilitates a wide range of much more systemic problems, we can find ways to use hardware that don't rely on blockchain that still provide a degree of anonymity for the most vulnerable without allowing it to be abused at the scale that is being used in blockchain today.
Thank you for the question, Congressman. I will be brief, but if you had a collection and you were trying to take up cash and you're passing around, at the end, no one really knows what bills. Most people don't memorize any distinct numbers on a bill. But what Chairman Massad was saying about how you can have private sector insight into the nature of the wallets, even as the government is ignorant as to the ownership of the wallets. That means you can cause the collector of the bucket of cash. You can tell that collector, look, those were my dollars. That's my money I put in. But you have deniability to the government if you are accomplishing a quid pro quo corruption. So right now, the system as it's set up is perfect. It is definitely an advancement in political corruption, and the status quo is it's a real problem as a result.
Okay, and let's see, if I could have one just quick news. The question of finality. One of the things that things have gone off the rails on is this freeze and seize authority for stable coins. Because the advanced ones in the United States apparently have built in, and they don't like talking about it, but they have the ability to freeze and seize their stable coins, all right, which through a centralized operation. All right, this is an anathema to all of the crypto purists, but it's essential to making that a usable product in the United States. Well, I was unsuccessful at convincing my Republican colleagues to mandate freeze and seize into their stablecoin concepts, but I think it's really essential. You know, if you have some crypto assets on your cell phone and someone puts a gun to your head and drags you into an alley and says, transfer all your crypto to me, are you really screwed? Or can you go to a trusted third party and reverse that transaction? And I was wondering if any of you have thoughts on the implementation of that and how you would implement something like that through freeze and seize or some analogous.
I think for me, when I think about stablecoins, they, to me, really do mimic deposit-like things that we would see in a deposit that we see in a bank. And so it's very hard to wrap my head around anything that would not put stablecoins under a prudential framework. Because when we are talking about how consumers are perceiving stablecoins in and of itself, they're perceiving it like a deposit or a bank-like product. And even with the disclosures, they're mostly buried in the privacy terms and agreements. So to answer your question, I do think a bit of what we see in bank accounts when there is a freeze on a bank account or where there's a stall on a bank account. I think if we were to mimic something like that with stablecoins, assuming that it would be under the prudential framework, that would make sense. But I think for it to operate independently of any sort of prudential framework or any sort of narrow banking thinking around how to deal with stablecoins, it could be risky because who's to say that when a bank is making an assessment on a transaction or a bank account that it's not getting flagged for other reasons that might not be as evident or as clear for certain communities or certain people who are wanting to use their deposits. And so I think we would have to think about the controls and how we could potentially use the freeze without it necessarily having a direct impact on certain marginalized groups and communities.
Well, I would say the ability of a stablecoin issuer to freeze and seize tokens is critical. There's no reason why the legislation shouldn't require a stablecoin issuer to have that. I think any good one does have that. They've used it already. The Genius Act, as you know, now includes that concept, but only in a very narrow way, as a way for a foreign issuer to say, I don't have to register with you because I can freeze and seize. A step in the right direction, but not nearly enough. But we do have to remember freeze and seize isn't reversal, right? The stablecoins still have to be in that wallet in order for it to be useful. So I think it's a very useful provision. I think it should be in the legislation. Whether you can get it in, is another question.
Mr. Lynch, I understand. Yeah. Why don't you pursue?
Thank you. Yeah, I think Dr. Foster has, I think, really identified a solution here, a big part of a solution, dealing with architecture of some of these assets. The other side of this is opportunity for us to offer that type of solution. And right now, the industry, when you think about crypto, it's a fusion of the financial sector and technology sector. The financial sector has always been guided by thoughtful regulation, which that regulation has also come usually after major disasters in our economy. We had a bunch of great regulation after the Depression, the banking failures, all of that. FDIC comes in, SEC comes in. So the tech on the other side is just move fast and break things. And so that ethic is, I think, dominating right now. I think what's going to happen is we're going to have a major disaster here. A lot of people are going to lose a lot of money, and then there's going to be that moment. And what I think about our work on financial services is we need to have a fix ready when the disaster gets public perception on our side and we move in. Because, FDIC insurance was hard, believe it or not, even though Congress at some point couldn't get FDIC done, so we pushed that out and said, okay, every state, if you want FDIC insurance for your depositors, you need to adopt this. And slowly but surely, not that slowly, but over the course of about 7 years, every state said, okay, we want that. We want insurance for our depositors. And so it became the norm right across the country. We've been in situations like this before. Right after the Civil War, we had a mountain of debt from the Civil War, and there were thousands of individual currencies in circulation. I mean, steel companies, coal companies, hotels, regional banks, state banks, everybody was pushing out their own currency. But then the federal government, in order to sort of bring some order to all this, came up with the greenback and then the dollar. And people realized that there was low risk in the dollar, so they all started going for – so the dollar became the one that everybody trusted, and all those other currencies, thousands of them, went to zero because everybody saw the dollar as it had the full faith and credit of the Treasury, and so it gained popularity, and then we were off and running. I think that a stable coin, a central a CDBC issued by the United States government would solve a lot of this because there would be a recognized unit that people trusted, that the world trusted, but the architecture has to be right on that. It can't open up the opportunity for full spectrum surveillance of everybody who uses it. It has to have some level of anonymity for people who are using that, at the same time having some transparency so that we can identify bad actors and guard against that. So that's sort of how I see the solution rolling out here. Unfortunately, we have to, like Congress does often, we have to wait for that big disaster to provide that moment of clarity and public perception. Can you just punch holes in that? Can you tell me why I'm wrong? Or I'm just learning every day. And I'm just looking. Let me ask you a more exact question. Here's the way I think. Trump is scamming us. Okay, he is committing crimes. He is committing crimes, and I think it involves conspiracy. I think he's using his influence on others to proffer a fraud upon his investors, the people who are buying his meme coins, people who are investing in his company, people who are, buying his stable coin. I don't think there's full disclosure there, and I think the case could be made that he's committing there's a conspiracy to commit fraud here, and I think the more rope an acquiescent Republican Congress gives him, he will eventually hang himself, basically, in legal terms, not physical terms, in legal terms. And that's the opportunity I think we have to wait for, that he is so blatant. The Republicans think they're helping him by not holding him responsible under the law. It's the worst thing they could be doing because he thinks he is above the law. He's convinced of that. He thinks he's the Pope last week. But, he's completely flouting every single regulation out there. And look, we've had some good court decisions that have identified instances where he has violated multiple sections of the Constitution. But what do you think are the most salient and viable opportunities to bring him to justice in terms of the work that he's been doing with stablecoin and with meme coins and things like that? Do you have a sense of, think about as an investigator who was trying to look at his activity and identify breach of law, what would you look at?
I want to start with maybe talking about maybe public perception, right? I think what has happened, there are moments that we've seen since he's been in office that could be exploited. What we've seen is that he's, one, tried to privatize our public goods.
I'm sorry, I didn't catch that last part. He what?
Privatize our public goods.
Yeah.
We've seen him access our payment systems at U.S. Treasury, and we've seen him using this gap that sort of exists that, certain people aren't having access to bank accounts, or they're not having as much luck in terms of accessing financial tools, and he's using crypto and these other types of scrupulous financial products to advertise and target these communities. I do think there is an opportunity, however, to exploit that. On one hand, you can't say we want to make sure that the government doesn't have insight into our transactions, but on the other hand, do exactly that, right? I do think that the solution outside of just bringing him to justice, and as I've said, is the perception. How do we think about mechanisms that we've had in place? You brought up CDBC. We also have your bill, which is the eCash Act, right? And that should serve as a both-and framework for when there is a transition of power. And it should be also an opportunity to offer an alternative solution to people who are excluded from everyday financial tools. I think if we could do that, there would be a public persecution of the president versus us necessarily looking towards enforcement agencies that might not have the tools right now to do anything or bring anything against him. I'll also add, there was a point that you made in terms of the need for thinking about surveillance and cash. At the University of Manchester, we're seriously doing some research and some of what Marquez has already brought up, which is like, how do we utilize hardware devices for the purposes of people keeping their transactions anonymized in a way that doesn't necessarily counter illicit finance goals? And what that will allow essentially is for people who are immigrants, for people who are trying to get abortions, for people who want to protest in a George Floyd or any other type of protest, they don't necessarily have to worry about the government surveilling their transactions and making legal decisions that could hurt them in the long term. What that also means is that if there is a both-and options in terms of retail services, which is what a CDBC would offer, then, or maybe even treasury accounts, which I believe Mr. Massad is mostly known for, I think there is an option for people to also transact with the same types of securities that you have with a bank account. But there needs to be a both-and. There's a both-and right now with a bank account and cash. There needs to be a both-and in digital infrastructure. And it also solves for other issues like the digital divide, like other types of issues that people are facing right now. And I think that Trump has completely exploited that, and now we need to exploit the contradictions in him saying that he wants to surveil transactions, but not his transactions.
Yeah, thank you. Very thoughtful. I just want to, before we go to Mr. Massad, the eCash bill would adopt the same cash restrictions that we have right now with physical cash, which is $10,000 on a transaction, right? So I think it gives a lot of people that same transparency as they have right now with physical cash. Yeah, but thank you. Very thoughtful answer. Thank you.
Thank you for the question, Congressman. I appreciate the history on the greenbacks. I would just maybe add two thoughts to it. One is we actually also taxed those wildcat notes, which helped drive them out of existence. And that led banks then to develop checking accounts, right? And today, what most of us use are not these, right? It's these. It's private money. It's commercial bank money. It's not a liability of the Federal Reserve, but it's backed up by a regulatory system, as you know. That's, to me, the way we should be thinking about this technology. I don't think the Fed should become a retail bank and issuing some digital currency directly to people. I do think the Fed should make sure the system, the electronic system with banks works well, and you can even imagine the Fed creating the rails on which private innovation takes place, right? Project Hamilton was a very good project and looked at how they could create rails, that weren't exactly blockchain-based. Now, again, I'm not talking about a CBDC. You'd still have private stable coins, but built on some system that the Fed oversees. Short of that, we just need to enhance the stablecoin legislation before us to create a very strong framework for this private innovation so that it doesn't pose all the risks that we've noted here. Again, similar to what we've done with banks. We're not talking about insuring stablecoins, but we are talking about creating a strong federal regulatory framework. And as to the personal enrichment part, again, to me, the question of Trump's activities comes back to, again, can we get bipartisan support for restrictions? Because I don't know how else you do it other than making sure the laws we're writing for stablecoins and for market structure don't create more opportunities for loopholes in evasion and arbitrage.
Yeah, that's great.
Okay.
Marquez?
I'll thank you, Congressman. I'll be quick because I can see the ranking member would like to move forward. Very quickly, I think there are two things that you all can do and are doing to address, I think, the question you posed, which is how do we make sure people understand the harm caused by the kind of personal enrichment we see with the Trump administration with respect to crypto and prepare for that disaster. And I think the first is zeroing in very directly and concretely on how those actions are going to cause personal benefits and profits for the Trump administration and the crypto industry that will likely come at the expense of ordinary Americans. And the reason I say it this way is when you look at what academic studies have shown about the past boom and bust cycles in the crypto sector, and for that matter, investment in other kind of speculative spaces, the tech boom, what often happens is a set of insiders get early information, invest early, benefit early, and many retail investors invest late, invest at the top of the bubble, and get hurt. You see that in studies looking at the fall of Bitcoin prices in 2022. It seems very likely that that sort of thing could happen or will happen now. There is a tremendous amount of activity and interest in the space, even if it's coming not necessarily from mom and pop investors, but from a lot of institutional investors. And that bubble is going to go up. That's going to enrich a set of people, and inevitably people are going to jump into the market for fear of missing out. And when they do that, I think the second thing Congress needs to do is to hold firm and not accept regulatory approaches that are anything less than what investors already have. Because if you create an environment where people believe these products are safe and that there is meaningful regulatory oversight when in fact there is not, when in fact people behind the scenes in the crypto industry have defanged the regulators and created sort of a garden path for them to get access to things, you are going to see a repeat of those crises. So if you all continue to do what you are doing, was calling attention to these conflicts of interest, continue focusing on private enrichment at the expense of public gain, then the narrative is going to create the opportunity for public interest voices to step in with a better solution, or at the very least, and hopefully we don't get here, help clean up that mess.
Great.
Thank you, Congressman. To be very short, we advocate at Revolving Door Project focusing on the material effects of corruption. Now, foreign policy is unfortunately not really front of mind with most voters, but the United Arab Emirates has a clear agenda in Africa. They are trying to assemble mineral rights across the country. They're participating in what some entities, I'm not an expert, but call genocidal behavior in Sudan and elsewhere. And also they're trying to access NVIDIA chips and might trade them to China. So it'd be better for the politics probably if this is a domestic company that had been involved in a $2 billion transaction to benefit Trump. But I think we just got to keep tracking what are the material impacts, why are they being corrupt, and why should we all be concerned?
Thank you. Madam Chair, thank you for your courtesy.
Wow. I want to thank our panelists here today. Each day we learn more, and today has given us an opportunity to think additionally about some things. Let me just say, Mr. Massad, when you talk about whether it's a commodity or a security, what have you, we can work that out. That can be worked out. I mean, I think there's some things we can do. What I cannot work out is Trump's corruption. That we just can't walk away from that. We got to have guardrails. Thank you so much for being here today. I appreciate your presence so very much. Thank you, members, for participating, and this hearing is adjourned. Thank you.